The best thing you can say about Slack is that it passes the verb test. Google, Venmo, Uber, they're all services that became verbs. They're so ubiquitous that we don't even think about it. Don't believe me? Google it. Or better yet, Slack us your concerns. That may sound like I'm being glib, but you know what? It's genuinely a really big deal. Look at it this way. We're talking about a cloud-based enterprise software company, something investors can't get enough of, right? You agree with me so far? With the turbocharged growth rate, they want that very much. It would seem like the Revolve was up 7 today. I mean, it just keeps happening and happening and happening, which is why I'm trying to get you in some of these. The recent spate of red-hot IPOs may have desensitized us to hyper-growth companies. The fact is, the Slack's in great company with these financials. Plus, the collaboration software space in particular has been really strong. Witnessing one of my faves, Atlassian. It's up 49%. That's symbol's team, by the way. I think Slack is superior to Atlassian in nearly every way that matters except profitability. Will investors care that Slack is still a long way from generating positive earnings? It doesn't seem to matter to anyone who's buying up that CrowdStrike, does it? No. Now, I think there will be a ton of excitement for this stock, but that doesn't mean things are perfect. I do have some concerns. We don't know how effective Slack will be at converting its existing free users to paying ones. I'm optimistic, but you know what? I was optimistic about Dropbox with the same model, and Dropbox, frankly, has been dead money for the better part of a year. I thought the freemium was going to work better. Whereas Slack has an unusual capital structure, which means its public shareholders won't have any real voting power. This has become increasingly common with tech, though. The unicorns do it. I hate it. Why? Because if something goes wrong, you and your fellow shareholders have no real recourse other than to dump the stock. There's no democracy here. You can't throw the VC bums out. Worst of all, 9 days ago, when Slack announced its guidance for the second quarter and the full 2020 fiscal year, it had some hair on it. In the quarter, revenue growth has slowed from the high 60s to the low 50s. For the full year, Slack is forecasting more like 47 to 50% revenue growth. That said, management told us this guidance only includes high visibility revenue. So maybe they're just being conservative here, and they're maybe doing a little sandbagging. With that in mind, how much would Slack be worth when the stock starts listing tomorrow? It's under the symbol WORK, easy enough, right? WRK. What should you be willing to pay for it? Okay, the highest price paid for Slack in the private market was $31.50 a share. Tonight we found out that Slack's reference price is going to be around $26. It's going to be $26. Given that we have the company's own full-year forecast and a couple of analysts who've already rolled out coverage, we can actually get a decent sense of the valuation here. At $31.50, Slack will be trading at 28 times this year's sales, 19 times next year's sales. Very expensive. Nothing else in Slack's peer group comes close. Having said that, it's much cheaper than recent IPOs within the rapid growth rates like CrowdStrike, like Strike, like Beyond Meat, like Zoom Video. This is much cheaper. At the reference price of 26, it trades at 23 times this year's sales, 15 times next year's sales. Again, cheaper. Where might the stock go? D.A. Davidson has a $31 price target on it, roughly in line with what people have been paying in the private equity market. Private market. Atlantic Equities just initiated coverage, $37 price target. As for me, here's the bottom line. I'd be willing to give Slack my blessing to get this. I'm willing to let you pay $40. $40. That's well above. Now, if you can get it below that, that's even better. If not, you keep your bat on your shoulder. Slack is a great story. $40. But we still got to be disciplined if you want to start a position this week.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.